Today we're going to be talking about government loans and community property states. Oh my gosh, it sounds like the most boring video in the world, doesn't it? It is. But here's the thing, it's so important and it screws up so many transactions that we are going to talk about it. Now, I live in a community property state and it's where I cut my teeth as a little loan officer. So I have dealt with community property states forever. But what can happen is sometimes you guys might call a call center, right? Those mortgage lenders where they go, hello, thank you for calling 1-800-LENDER. I'm here to help you. They may not even know what a community property state is. I know, I woke up and I chose violence, but here we go. You guys need to know if you're in a community property state, if you are married, and if you are getting a government loan. Here's why. So first, let me list the community property states so you know if this applies to you. So if you're thinking of buying in one of these states, okay, let me say that again. If you're gonna buy in one of these states, this is very important. Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. Yes, I was going for like a Miss America when they announced some type vibe. Okay, so here's the deal. Let's say you're getting a VA loan and you're like, yeah, my wife doesn't want to be on it. Like, we keep our finances separate. Cool, doesn't matter, community property state. So in a community property state, what is yours is hers and what is hers is yours, or what is his and what is his. Whatever your preference is, the bottom line is that if you guys are married, okay, and it's a community property state, even if your spouse doesn't want anything to do with you or the loan, they come into play, okay? Now, do they have to be on the loan? No, they don't have to be on the loan, but I'm gonna pull their credit. I have to hit you with their debt. Yeah, seriously. Now, even if they're not on the loan, so FHA, VA, USDA, even if your spouse is not on the loan, okay? They want nothing to do with the loan. They do not want to be on the title. If you are in a community property state, I still have to run their credit and hit you with their debt. Now, in certain circumstances, if your spouse has a job, we can use some of their income to offset some of their debts, okay? But once again, they're not even on the loan and we're doing all of this. The reason I bring this up is because it's a question I got a lot in the last few weeks. I've been doing tons of planning calls with you guys. I love it. Get on my calendar. Let's do a mortgage planning session together. It's really good because we talk about this stuff. And one of the things that's come up is like, well, I don't really know what my husband's credit score is, or how much debt he has. I think he has a lot, but we're not going to use his income and he's not going to be on the loan. Well, where do you live? Well, I live in California and I want to do a VA loan. Well, guess what? He's coming into play then. We're going to look at his credit. Now, if your spouse has, because this is the next question, they're like, well, my spouse has a really terrible credit score, so can I not get a house now? No. I mean, look, if we're doing the loan in your name, we're using your income and your credit score, okay? I am using your credit score to qualify for the loan. Okay. However, I have to look and see how much debt your spouse has. So if your spouse, let's say you have a 760 credit score, your spouse is not on the loan and they have a 520 credit score and they have $200 a month in payments. Okay. Is that 520 going to hurt you? No. As long as they're not on the loan, it doesn't hurt you. The $200 a month in payments, is that going to affect you? Yes, because that's now your $200 a month debt unless I have the ability to offset it. So one of the reasons I bring this up beyond that is, a lot of times people are afraid to apply because they're like, well, my spouse has terrible credit and I know it's a community property state. Look, if they don't have a lot of debt, it's usually not a big deal. And what we see in a lot of these cases is they may have had charge-offs or some stuff from the past. It's very rare that I'll see a spouse that has $10,000 or something crazy like that a month. So usually it's just they had a bad experience with credit. They never put in the work to fix it. They have a trash score. Okay, that's usually what I'm seeing. So can you still get a VA FHA loan in a community property space? state, if your spouse has terrible credit. Yes, we're just going to hit you with the debt. So that's what's really important to know. Now, the next thing, if you're like, well, look, they really want nothing to do with the house. We have totally separate finances. We really don't care. It doesn't matter. It's a community property estate. These are government loans. If that's the way you feel and you're like, they're not going to let you run credit, they don't want to be a part of this in any way, you need to go conventional. Because conventional doesn't look at your spouse's credit. Conventional doesn't take the whole community property into accordance, whereas government loans do. Okay. Now, the other thing that sometimes I'll hit, and I haven't hit this in a while and I'm very thankful for it, is someone will not tell us that they're married and they'll try to do a loan. They'll be like, yeah, no, I'm single. It's great. I'm in California. I'm single. And we're like, okay, cool. You know, we get pretty decent in the loan. And then we find out on the Scooby-Doo report they're married. And we're like, you're married. And they're like, well, I didn't want them on the loan because they had bad credit. So I don't have to, like, we can, no, we have to report it. So here's the bottom line. If you're in a community property state and you're married and you're doing a government loan, your spouse comes into play even if they don't want to be on the loan. So it's really important to have an open and frank conversation with them. I'm always happy to have it. You know, we'll do a lot of it where we'll do the application in one person's name. They think their spouse's credit's trash. And then we pull it and we're like, hey, it's actually good. Like, let's put you guys together. This is fantastic because we're going to hit you with the debt anyways. So I hope this has been helpful and clear. If not, you know, always let me know. Questions, comments, I'm here to help. But yeah, community property states, because we're seeing so many people in those states, and VA, FHA, USDA loans, those are government loans, so your spouse always comes into play. Thanks for watching, guys. I'm licensed in 48 states. I do mortgages, and I want to help you guys out. So please reach out and get on my calendar. Thanks.